Are you ready to go? Alrighty. So welcome everybody to the Texas REIAs Real Estate Investor event. I'm actually going to get started tonight, and our main speaker, Chinook Grove, is a little under the weather, so I'm the substitute. So please put up with me on that. But we're going to get started by giving you guys a market update that is sponsored by the Texas REIAs. The Texas REIAs is the largest by far network of real estate investor associations across the great state of Texas. Over 100,000 members, if you add them all up, in Austin, Dallas, Houston, and San Antonio. Been in business since 2003, and it's a great place to come to get tribal knowledge, get plugged in, build a power team, get training, experience, partner with others, and so forth. And one of the things that the Texas REIAs provides the community is market data. In fact, we do market data and updates every single month, and I'm going to share a little bit of market data with you guys right now. So what's going on in the real estate market? Well, you know, everybody's like, is the market dead? Is the market alive? The market's not doing much, to be honest with you. You know, it's certainly settled a lot, and I'm talking primarily residential here, over the last year. For the last 2 years, the market was going up like a freaking, bottle rocket, and then just kind of leveled out. And people are like, are things down, are things up? Well, you know, sales are down. The number of houses being sold are down. Texas-wide, they're down about 12%. The prices are down a whopping 1%. So basically, prices are flat. Now, why are sales down? Well, the biggest reason that sales are down is that nobody wants to sell, right? Because everybody that bought their home probably has a 3 or 4 or 5% mortgage, and they know that if they sell their home, they're not going to get another 3 or 4 or 5% mortgage, right? They're going to get a 6 or 7% mortgage. So the sellers don't want to sell. And to some degree, the buyers don't want to buy, because now if you buy, you have to get a 6 or 7% mortgage. And people are like, wow, interest rates are high. No, not really. Actually, interest rates are normal again. Okay, you know, 3 and 4 and 5%, that's not normal. That's freakishly abnormal. Yes, we went through a period of freakishly abnormal, but by this, going back 50 years, that's not normal. You know, I have been buying rental properties for 20 years now. Most of my rental properties, and a lot of the loans I still have to this day, most of those loans are 6.5%, 7.5% loans, because that's what you got when you bought rental properties back in 2002, 3, 4, 5, and that was just normal. And for years that was normal, and for years after that it was normal, and then just for a little period of time, things went into that abnormal, and they're back to normal. But by any standard of what recent history people expect, they're high, right? And everything's relative, and because of that, you know, the number of sales has dropped significantly, although the prices haven't really changed much. In San Antonio, they're down a whopping 1%, right? In Austin, they're down 10%. Now, Austin is a little bit of an anomaly in that Austin had a much bigger run up than any of the other cities, and then it had a bigger run down. So that's the anomaly there. Dallas, 1%, Houston, 1%. Going into some more details, this breaks it out into a little bit more detail. The average sales price for a house in Texas is $429,000. It's actually up a little bit, compared to a year ago, although the median price, which is where the highest number of buyers and sellers is, actually down a little bit. Days on market has gone up a little bit, takes on average 47 days. For a house that has sold, it's on average taken 47 days. Months of inventory. Now, months of inventory, I think, is really, to me, the most important number on this whole chart. What is months of inventory? Months of inventory tells you how long it takes to sell a house on average. That's what it tells. Days on market tells you how long it takes to sell a lucky house. Months of inventory tells you how long it takes to sell an average house. To me, that's much more important, because I can't bet on being lucky, but I can bet on being average. So in other words, if no new houses were put on the market, right, we just stopped putting anything for sale, and we just sold what we got for sale, it would take 3.3 months to liquidate everything. That's what that means. And that means on average, it takes 3.3 months to sell a house. Some a little more, some a little less, average is 3.3. Now, the rule is this: if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If you have right around 5.5, 6 months of inventory, you have a neutral market. As you can see, we still have a pretty darn strong seller's market. So for anybody who says the market sucks, well, you know, this by historical standards is a market that sellers dream about. Pending sales is actually down a little bit versus a year ago. Active listings is up a little bit, and that's what happens when you have more property for sale. Your months of inventory goes up a little bit. This is just some historic data from 21 to 22 to 23. You can see in 21, you know, prices went way up. They went up 18%. In 22, they went up another 10%. And then in 23, they leveled out, right? Now they're down 1% compared to a year ago. So that's the big Texas picture. Now, if you want to get into the individual cities, San Antonio is the most affordable city in the great state of Texas for a major city. Average price is just $387, and it's flat. Median price down a little bit, 2%. Days on market's gone up a little bit. Months of inventory, interestingly enough, is a little higher than it is statewide. Total pending sales is down, not surprising, not as many houses being sold. And active listings is obviously up a fair amount, and that's just because not as many people are buying because of the higher interest rates. If you look at Dallas, Dallas is more of a bellwether for the state. Average price 516. Yeah, that's not a typo, up 1%. You know, median down 1%. Days on market up a little bit. Inventory still pretty low, just 2.6 months of inventory in Dallas. And total active listings is actually up a little bit, but not very, very much at all. Austin. Now, this is not a typo. Average price in Austin, $593,000. Isn't that crazy? It is down 8%, but $593,000, $600,000 for an average house in Austin, Texas. We actually did some research on this. We discovered Austin is actually Latin for San Francisco, because Austin is now the San Francisco of Texas, interestingly enough, from a high-tech and everything else perspective. Now, the median price is a bit more affordable. Days on market, 59. Months of inventory, 3.7. You know, yes, last year is 2.7. So, you know, Austin had the biggest run-up in prices. You know, look at this. 21, prices were up 29%, right? Almost in 1 year, we got a 30% appreciation. Next year, we got another 10%, and now it's down 10%. So if you look at it, went up the most, and adjusted the most. But you're still doing just fine if you own in Austin and have been holding it. Houston, you know, 429 average, up a tiny little bit, median down a tiny little bit. Days on market is about the same as the state. Active listings is up a little bit. Boom. So that's a little bit about what's going on in the great state of Texas. So what's going to happen next? Who knows? Well, we have some pretty good ideas. We don't actually, in the residential space, expect a whole lot of anything to happen. Because interest rates, let's talk about interest rates. When interest rates go up, what does that do to home prices? Make them go up or down? Go down? It actually does this, right? It pushes them up and it pushes them down at the same time. Right? I mean, when interest rates go up, building slows down, we're not building enough supply. Real estate doesn't really care much, by the way, about interest rates or really about the economy. Real estate cares about one thing, supply and demand. It's all about supply and demand. And when it comes to predicting real estate, it's actually much easier than the stock market or much easier than the economy. I have no idea what the stock market is going to do. I have no idea what the economy is going to do. but I do have a pretty good idea of how many people are having babies and how many people are moving to Texas. And you can look at the data and how many houses we're building. And if we're not building enough houses for all the people that need a place to live, then the prices go up. And if we're building too many houses for all the people that are going to need a house to live in, the prices go down. And it's really pretty obvious when you look at that. It's not the economy. People think it's the economy. During the Great Depression, real estate prices went down a whopping 6%. Nothing. During the Great Pandemic, another 1 in a 100-year event, real estate prices went up 30%, right? So does the economy affect real estate? No. Supply and demand affects real estate. In 2008, we had a big problem, right? Money was free up until 2008. Anybody that could fog a mirror held under their nose could get a loan. So it was free and loose and easy to get, and we built a bazillion houses. And the way we filled all those houses is we gave everybody that could fog a mirror held under their nose a loan, right? And then in 2008, lending stopped. It didn't slow down, it stopped. It just hit a wall because all of the banks went bankrupt. Because as it turns out, giving people that don't have jobs, credit, and income a loan is not actually a really smart thing to do. And those people were not able to repay their loans, and all of the banks went bankrupt. Do you know that in 2008, the government actually changed the definition of bankruptcy? Did you know that? That whole mark-to-market thing, that was changing the definition of bankruptcy. They didn't call it bankrupt, but they were bankrupt by any reasonable definition. Their assets were much less than their liabilities. That's bankrupt, right? And they got bailed out. Eventually, they got back into lending. And ever since, it's hard to get a loan. Right? Now what do you have to do to get a loan? Turn over your firstborn, fill in a 1,900-page application, submit blood samples, right? I mean, a lot. And because of that, building has been constrained pretty much ever since. So yeah, we're building more houses, but not nearly as many as we could have had the money been easier. But that being said, people keep having babies, and they keep moving to Texas. So we have growing demand and somewhat constrained supply. Yes, prices are going to stay depressed for a while. They're probably not going to go up, and then maybe they'll even go down a little bit, but there's nothing major like in 2008 when the buyers just stopped buying because you couldn't get a loan, right? So the buyers, the demand disappeared like that, and the supply was still there, right? Now we have growing demand, we have a little more supply, right? And we have forces going like this on what to do next. And what has that done? It's shrink the number of houses that are actually selling. It's increased the inventory and depressed the prices about 1%. And we don't see any big thing in the near horizon that's going to change that trajectory. Now, every single market might have its own unique facets, and you need to look at real estate as a local thing because real estate is very, very local. But that's kind of our market update for real estate.